We're going to leave that mentality out of this. This is private equity. Yes, I'm doing real estate, but let me invest in other people's deals who have a track record that's greater than mine. So now when I'm asking for that amount of money, it's based on the track record of the people who I've created a partnership with. That's what gave me the comfort.
Welcome to Multifamily Insights. I'm your host, John Casman, and I want to thank you for joining us for another great episode. Listen, if you are a fan of this show, get some great value, I want to hear from you. All right, leave us that honest feedback, that rating and review. It helps us, but it also helps other listeners find the show to get the value they need for their own investing goals. And listen, if you haven't done it, or for whatever reason, or this is your first time listening, be sure to hit that follow or subscribe button so you don't miss an episode. Now, we've got a great show today. We're going to be talking to Joseph Kimbrough. They say you're the average of the 5 people you spend the most time with. So if you want to grow as a multifamily investor, you have to spend more time with other multifamily investors. And an easy way to do that is to join our apartment investing mastermind group today. Just go to casmancapital.com and click on the mastermind button. Now, as a part of this group, you'll get access to expert trainings, group coaching calls, industry news and updates, as well as all of our webinars and workshops, including our 3-hour workshop on raising capital. Again, if you want to be around other multifamily investors that can help you scale your portfolio today and grow your network, make sure you're a part of the Apartment Investing Mastermind. Just go to casmancapital.com and click on the Mastermind button today. Now, Joseph Kimbrough is a multifamily real estate and single-family real estate investor. He's also written articles through the Forbes Business Council as a member. He's published different articles on the Forbes platform, and he is now one of the individuals who is converting cash value life insurance policies in order to invest in large apartment buildings. Let's welcome to the show, Joseph Kimbrough.
It's nice being on the show. Thank you for having me.
Absolutely. Hey, Joseph, I went over your bio at a very, very high level. Why don't you take 2 minutes and fill in some of those gaps?
Yes, so what we do is Apex Real Estate Investments is a private equity fund. We raise money and then we invest into large apartment buildings, specifically right now throughout Texas and the Southeast. Now, being in private equity, you're able to invest in single family and multifamily. There's a number of things you can invest in. Also, I noticed that you touched on the cash value life insurance policies as well. I wrote a Forbes article on how you could take whole life policies and use that to invest into multifamily. So what I did after I wrote the article, I learned about annuities and then learned about index universal life insurance policies. And so I figured out a way to take those, put them together to scale into real estate even more.
Oh man, that's a lot of great, rich territory for us to get into, right? You talked about the whole life policies, the annuities, the index, universal policies. We're going to come back to that. So I'm going to put a pin in some of that right now. We're going to start with kind of the real estate, right? So I know you do
Yeah.
some multifamily, some single family. You mentioned that, Apex is really a fund that you created to help other people invest. What got you to decide that you wanted to launch Apex as opposed to maybe building out your own portfolio?
So when I got started in real estate, I was actually a wholesaler. And I did that for 3 years before getting into private equity. So I started off, selling, I think anywhere between 15 to 20 properties a year. And then I sold over 20 plus my last year as a wholesaler, which was 2021. I ended up meeting some guys at a conference, at a multifamily conference, and they had been fund managers for like 10, 15 years. They would raise maybe like $10 million, $20 million and go into these apartment buildings as equity partners. And so they, ended up meeting me. We had a conversation. And so I decided, hey, okay, let me move into this direction because it's the same thing as wholesaling. It's just that now I'm having people invest the money with me versus me selling away equity. So I'm building a portfolio for myself and them as well.
That's very interesting when you talked about you saw a correlation between wholesaling and launching a fund. Can you elaborate on that? Because I think many people may say, oh, they feel like two completely different worlds, right? I mean, wholesaling
They
is, buying houses or, getting those houses under contract, those properties under contract, and then flipping that contract versus creating a fund where you're now managing people's money, having equity in the deal, having to, at least play some role and make sure those properties are executed well. On the wholesale side, once that contract is signed, you don't care what happens, right? So elaborate a little bit more on kind of how you saw the similarities between wholesaling and launching this fund.
So as a wholesaler, you used to seeing people spend $500,000 or 250,000. One of the biggest hurdles people have when it comes to raising money is being comfortable asking for that amount of money.
Mm,
So if you're a wholesaler and you're used
mm.
to saying, hey, look, you paid 225 for this here property and this the price. Well, when you're going to raising money, when you have your minimum sit at 100,000 and you're speaking to potential investors, you letting them know, look, this is the minimum investment. It's 100,000. This is the only way you're going to get in on this opportunity. And you have to be comfortable to ask that question, ask for that amount of money. So, like for example, I'm in the process of setting up a new fund, and the minimum I've been going back and forth on it. Talk to some of my attorneys, talk to people who have other more experience than myself, and I was setting the minimum at 500,000. Someone has almost convinced me to keep it at 250. But you have to be comfortable asking for that amount of money, though. You can't sit it at that limit and you're not comfortable. You're like, hey, can I get 500? Like, you have to be bold about it.
You talked about being bold, asking for a bigger amount, which definitely makes a lot of sense there. For people who have never raised money, that feels like a complete disconnect. You go from wholesaling to, setting minimums of 100,000, 250,000, $500,000. Um, you know, when people have that track record, they seem to be more comfortable doing that. When you're newer and you haven't launched that fund, what were some of the steps you took to get comfortable having those higher thresholds for the minimum investment?
Yes. So, what I did was not go off my own track record. This is where something I noticed in the real estate industry when I was a wholesaler is people did not always want to create partnerships. Here's what I mean by that. They might not want to invest in the term other people's deals. Have you heard that before?
Hmm. Absolutely.
Exactly. So what I did was I said, no, we're going to leave that mentality out of this. This is private equity. Yes, I'm doing real estate, but let me invest in other people's deals who have a track record that's greater than mine. So now when I'm asking for that amount of money, it's based on the track record of the people who I've created a partnership with. That's what gave me the comfort.
Let's stay there because I think that's critical, and this is one of the challenges I face, and I'm sure many people face, particularly if you're looking to raise money, right? If you're talking about raising money for deals, there is something that I like to call credibility, right? When it comes to that
Yep.
credibility, if you have not executed it, you're just simply not credible to do that. So that doesn't mean you can't invest or you can't raise capital. What it does mean is you need to align yourself with someone who has that experience. And sometimes that means you investing as a limited partner yourself. Sometimes that may mean joining the team or being a partner on a team, co-GP, however you want to phrase it. But you got to find a way to join and be a part of that team. But you have to be willing to lean on others' experience. This is why mentorships and coaches are so important, or partners who have more experience, because you can lean on their experience given that you don't have any. And you're not going to get people comfortable investing with you if no one on the team has ever done whatever it is you're looking to do. So you have to break that mentality. You have to be open to partnerships, to working together, collaborating. You hear people say over and over and over that this is a team sport when it comes to investing in larger commercial real estate deals. I don't know any successful person who does it all by themselves. Even someone who uses all their own capital still brings on a property manager or, a broker or someone else who's helping to manage certain aspects. So you have to have the team mentality if you want to be successful. Let's go back there though, real quick, Joseph, because I would definitely want to make sure we understand kind of how you made that leap because I just think that's still just incredible, right? To go from wholesaling to being a fund manager and getting people comfortable investing with you. Just talk a little bit more about some of those steps. I know you mentioned that you aligned yourself with a group who had more experience, but what was that process like in vetting them and figuring out that this was a group you wanted to work with?
I went to their conference. I saw how many people was following them. How many people, imagine this, a person who has 500 people show up from around the country to hear them speak at one of their conferences. Chances are they know what they're talking about. And I talked to the people that are new in, hey, have you gotten a deal following after these people? Yes. So I vetted by talking to the mentees because mentees will tell all. when it comes to a person, you know? And also, what I wanted to add on is when you're getting started, you have to be comfortable having a seat at the table until you're able to have a voice at the table. No one walks in and just have a voice at the table. You have to sit in silence and listen and learn. Then you speak.
That's a lot of values, Gabe, right? Because again, I think a lot of people who come into real estate, they come into real estate because they see a better future. They want more independence. They want to create this financial future and have some financial freedom. So they want to hit the ground running. And they don't necessarily think of it as starting a new industry, starting a new career, starting from the bottom and really having to learn some of these things so that they can be in a position to be successful. And when you have the right mentality, you can have more success. You talked about having a seat at the table as opposed to being the head of the table or having a voice at the table. Sometimes you just got to sit and listen and learn. And then once you get comfortable, once you understand what's really happening, you can take more on. So I really love that approach. You mentioned a couple other things here about how you started to scale, leveraging, the folks that you partner with and, understanding kind of the fund. Talk to me more about kind of the fund you created. What were some of the challenges you faced in talking to potential LP investors investing in the fund? And then just for clarification, when we say fund, was this like a blind fund or is this kind of this is a blind fund? So talk to me about that, right? And explain what a blind fund is for those folks who aren't familiar and how did you get people comfortable investing in a blind fund, given that you were kind of fresh out of the gate into the multifamily space?
Yes, so a blind fund is a fund that doesn't have properties already identified. So you're going to people saying, this is the concept of what I'm going to invest in. So now they have to trust you enough to believe in you investing into that concept versus them having something that's already there that's hard improved with numbers that they're looking at to invest in. So another part, go back on the other part of that question, on the beginning part before that one.
Yeah, so the blind fund, right? And then the second part is just getting people comfortable
Oh,
investing with
yes,
you,
the
particularly now
struggles.
since it's a blind fund, given that again, this is kind of a new endeavor for you.
Yes, the struggles. I remember you asked about that. So
Yeah.
early when I first set the fund up, you're gonna laugh. So we set up a what's called a 506B fund, meaning you can accept accredited and non-accredited investors. Now, the problem with that is you cannot market. So coming off of being a wholesaler, you didn't necessarily just build a whole bunch of high net worth, passive investor list people. All your people are active investors who don't invest in other people's deals. So when you're trying to sell them on, hey, invest with me in this deal, the answer is typically no. So when I started off, I got a lot of no's. And I had one investor invest and she invested 50,000, which was less than the minimum. So I was like, man, it was tough because like 8 months, no investors, right? And then on top of that, I was staying in East Africa for a few months. So I had to work on the opposite end. It's daytime here, nighttime there. So I'm in the office in Tanzania with a big Africa sign sitting behind me saying invest 100,000 in my fund. So you know how this can be taken already. And it did not dawn on me until like after like a few months. I said, man, shoot, I'm about to go back to the US. I was like, all right. So we left, came back to the US. And when I got here, that's when I finally got that investor. And I literally had to drive from Indiana to Dallas, meet her in person, drive back, get my stuff and move back to Dallas, and then she finally invested.
Wow. Were you
Yes.
planning on moving before meeting this investor?
So when I was staying in Tanzania, I did not plan on coming back to the US. I
Okay.
was not planning to come back here at all until I realized the complications of raising money while in a different country. Yeah.
And you were kind of alluding to it. I want to be direct just so people could follow, what you're getting at, right? You're talking about you were in Tanzania, you have this Africa sign in the back, you're trying to get people to invest $100,000 minimum
Thinking of a
with you.
scam.
The perception there is that you're out here touring the world, having a great time, and you're getting people to invest, but who's actually overseeing the deal? And you're obviously over here having a great time. So it's going to give
Yep.
people some pause on that, right? So you start
Not
to
a problem.
recognize the optics and said, you know what, this just isn't a good look. No matter, what my intentions are, people don't know me that well. This is going to look like maybe I'm not doing something right. Move back to the United States. You have this one investor, you drive to meet this person in person, get to know them, and then ultimately you end up moving to Dallas, and that person decides to invest with you. Um, wow, that's incredible. I mean, it also shows, how in tune you were with recognizing, like, okay, here are the things that I'm going to have to overcome, right? What I don't have in experience, I can make up for in hustle and hard work and showing up, right? And I think that my guess is that investor appreciated you taking the time to meet them in person, to talk to them about the deal, to allow them to get to know you, and that ultimately got them comfortable to invest. Can you just elaborate a little bit more and talk about the importance of maybe overcoming some of the limitations you have when you're starting out?
Yes, so to overcome those limitations, you have to make up for it with hustle. You're gonna have to get out there, get into like different events, build up your presence online. You have to build that trust with people. Honestly, like with LinkedIn, I have more people who follow me on LinkedIn than I do on Instagram. The reason for that is because LinkedIn will build so much more credibility with high net worth investors than Instagram ever can. Now, I say that, and not to some people might agree, some people might not agree. But the reason why I say that is because LinkedIn already has that built. Like, for example, you get top real estate voice. When a person is saying that on your page on LinkedIn, that's very much okay, he's credible. And you're also putting more information out there. But when you're on Instagram, you're showcasing more lifestyle. Well, anyone can showcase lifestyle. There's a lot of people on Instagram that showcase lifestyle, but they don't have two cents to rub together. So everything's
Great.
about building credibility.
Yeah, building a credibility and, making sure that you're, basically in the right circles. You talked about events, you talked about LinkedIn versus say Instagram. Can you talk more about that one investor? I mean, what kind of questions was she asking you that, ultimately got her comfortable investing with you?
The number one question is, how do I not lose my money? What's the risk involved? That's the number one question. Who is going to be supervising this here? Because if you're new and you don't have experience on how to operate one of these investments, then how do I know that my money is safe with you? That's where being comfortable and being humble enough to say, let me partner with people who have done this here longer than me. A lot of times you want to go in by yourself, and so you can say, hey, I did this here by myself. I'm 100% owner. I'm this, I'm that. And all of that is ego. But when you lower that ego and you humble yourself, now you open more doors than what you would have opened if you just did it yourself. And by her investing, then me investing to that apartment building with that group, it opened up doors for me to invest with other groups, groups bigger than them, get into larger apartment buildings, like a 400 and something unit apartment building in Phoenix, 200 some apartment building in McKinney, Texas. Like those doors don't open if I'm not willing to partner with these people. And plus, even like when you get started in something like multifamily, you can have the longest track record possible in single family. When you're dealing with those brokers, they do not care about that. They say, have you done anything in multifamily? So by being an LP with different groups and partnering with these groups, being like on the GP team with a couple groups and stuff, now when you take that portfolio and you show this here to a broker, they say, okay, I can take this guy serious. This is a real player in the business. He has some skin in the game. He's done some things he understands. But if you come to them, hey, I got a 50 unit single family portfolio, there it's different.
Yeah, you're talking about credibility. It's two ways, right? There's credibility with the investors. There's also credibility with brokers. And you just hit on why it's so important to have that team mindset because it's a lot. It's a lot to take on. And people in this space, they want to make sure you can deliver. And if you haven't done it before, then they're just going off of your word. And quite frankly, the best indication of someone being able to deliver is the experience and track record that they've done in the past. So that's what people lean on heavily. So when you don't have that, it's so critical to have other people on your team who have done that. And you can leverage their experience and partner with them, learn and grow from that
Broker,
standpoint. Absolutely.
bro- brokers want to know that you can close the deal. That's the most important thing to a broker. They want to get paid. So if you ever close the deal, they're like, I don't know. That's when you start getting hit with all the questions. Let me see a proof of funds. Is these shields up? You get all
Yeah.
that stuff.
And as
Versus,
a wholesaler, I know I tell people all the time, right? So
yep,
I do some coaching and I tell my clients to say, listen, uh, if a broker asks you for proof of funds, that means you didn't do something right to establish credibility,
yep,
right? You came out of the gate and whatever you did, their eyebrows went up and said, show me you're worth my time. I'm not about to send you anything until you prove you're at least worth my time. And I
exactly.
mean, that's a sign that again, you got to know your stuff. It's a different lingo. But I think the reality is you do need to be able to show that you can close a deal. You need to think through these things. For me, it's not just answer the question, but like, no, if they give you the deal and they say, all right, we like your offer, we're going to move forward with you. Now what? And so many people, they just write LOIs and lowball or whatever, and then when they do win one, they go in the oh crap mode because they really never thought through how they're going to close it. They don't have the net worth and liquidity to sign on a loan. They don't have guarantors lined up. They don't know where they're going to raise the capital. They haven't been talking to, passive investors. So they get into the situation where if the best case scenario for them happened, it still wouldn't work, right? So that's why it is so important to actually think through these things and have a plan in place, work through, all of the steps to take these deals down so that you can move with more confidence through that process.
Yep, exactly. There's something they used to say when I was in the Marine Corps. Slow is smooth, smooth is fast.
I love it. Slow is
Take your
smooth,
time, be
smooth is
patient.
fast.
Yep, be
Yes.
patient.
I love it. Hey, Joseph, I want to go back to where you early on we were talking about how you found this opportunity, and now with the whole life insurance policies, with the annuities and the index funds, you found more opportunities to bring investors into the deal. Can you elaborate on some of these different strategies? Because this may be new for many of our listeners.
Yes, so one of the strategies that we managed to put together, me and my team, is that we recently built a partnership with a bank here in Texas, and they will loan 100% of the value of an annuity, a fixed index annuity, if it has $1 million or more in it. So now you can utilize that annuity and get the loan against that annuity, which they'll give you a lower rate. Then you can turn around and use that to invest into real estate. And now you still have your money growing into that annuity while it's invested into real estate. So it's actually protected. So you didn't lose anything. That's one of the strategies.
So you take the annuity. There's a bank that will loan you 100%. So for illustration purposes, you said the annuity has to have $1 million on it.
Yes,
Um,
$1 million or more.
$1 million. I can go to that bank. They're gonna loan me some money. Let's just say, is it cut up by a percentage? So it's like 10% or 20% or something like that.
No, so like they'll do different percentages for you. So let's say, for example, you have a real estate deal, you wanna it's gonna take 2 million. You could take 2 million, put it into an annuity. This is protecting that 2 million. Then you turn around, you go to this bank, you can borrow against that. They will give you 2 million, and you put that towards the investment. The reason why the bank is doing that because they see a fixed index annuity as a much safer investment on their part than if you told them, hey, give me 2 million for this here piece of real estate. They're not going to do 100% value. They might do 60, 80 max. But for the annuity, because it's backed and it's backed by A plus company, they're going to do 100%. so you actually get more money.
And when you're taking this strategy, are you partnering with like LP investors on this, or is this kind of in place of kind of that first position loan on the asset?
This is something that has a bunch of ways you can utilize it. Like, depending on how you want to, you can use it to replace a first lien if you just have a bunch of cash on hand like that. But this is also something that I thought about when it came to LP investors, just to add an extra layer of security for them. So now instead of telling them, hey, look, plus also on top of that, when you're raising money and the bank is giving them a $1 million threshold, that helps me out also. But most importantly, it actually protects their money more. So now they have that hedge with the annuity, plus they can turn around and move that money into a fund.
What what kind of terms do you typically see on something like that as far as like repayment process or repayment terms? Is that like 10 years, 5 years, the life of the investor? How long do you typically have to pay that back?
They're doing it, I'll say about the 10 year. It's really depending on how long of an annuity you have. You have a 10-year annuity, then because they know that annuity is making money over that 10 years, they will loan for that 10 years. Or if you want to have it loan for 7. So it just depends on what you want to do. That's
Yeah.
also the way the bank wants to do it is up really to their full discretion. So I don't necessarily work for the bank. So it's a case by case basis.
I mean, and definitely this is one of those situations where, if it's of interest to you, there's probably more questions that we could get into during our conversation. So I advise you to reach out to Joseph and his team, and he could probably get you more resources as well. But the point here is, at least my takeaway, and this is something I've always tried to stress. A lot of times when you're talking to investors, they think about how much money they have saved in their bank account right now. They may not necessarily think about the assets that they have collectively to invest in real estate. So you're talking about life insurance policies,
Yep.
annuities. We often talk about 401ks and self-directed
Or
IRAs, right?
yep.
These are areas where people have money and they just don't think about it because it's not something they deal with on a day-to-day basis. They don't check those accounts very frequently. But if you've ever worked a job, had a 401k, left for another job and never rolled over those funds, you can use those funds to invest in real estate deals. So sometimes when you're talking to potential investors, helping them find the money that they actually have access to is part of how you can help people invest because many people don't want to have their money sitting into, the old 401k or sitting into
Yep.
the stock market. They're looking for diversification and they're not thinking about the money that I, socked away 10, 15 years ago.
They had
They're
money.
just not thinking about it. And it's money that's sitting there typically. So if you can help them put that money to work and allow them to learn a little bit more and figure out how real estate can help them, that's an added benefit that many people would be looking for.
Exactly. To add on to that, when you're over a fund, like as a fund manager, you're not necessarily in the business of real estate. So you're in the business of finance. So you need to be an advisor to these people of some sort. Now, obviously, there's things that you can say, you cannot say. If you're like, let's say you're a registered investment advisor. Now, there's different things you can say and can't say. But when you're talking to these people, you have to listen to them so you can figure out, wait, you have money over here. Why don't you use that to invest versus trying to pull from here? It would be much wise if you did this here. But you're not necessarily giving them advice. You're just showing them that, hey, look, you have money. You're an accredited investor. You have money. Like recently, there's people who they're rolling some self-directed IRAs over close to $1 million in self-directed in 401k money that they just so happen to stumble across because they realize, I don't I have money like this. Yes. So it's not always do I have cash on hand, it's where can I find the cash.
I love it, man. Jill, so that's a really great tip for people because again, it's very easy to lock in on what's sitting in your bank account and not necessarily think about the total assets that you may have access to when you're an investor. So whether you are a fiduciary, whether you're a fund manager, or just looking to raise capital for your deals, helping those investors think through where they may have access to more capital can help you get into a situation where you have more for the deals you're looking to do. Again, if you want to connect with Joseph, his LinkedIn is going to be in our show notes, so just check it out there. Right now, we're going to transition to a round of insights. Joseph, give me a failure or an apparent failure that set you up for later success.
So a failure to set me up for later success. I would say early in the process of starting to fund up. The biggest failure for me during that time period was investing into a property, and that property did not pay out distributions. And it was going to take like 3 years. That's if you want a welcome to multifamily moment, that is a welcome to multifamily moment. And so that actually brought out more of that hustle in me, because then with those investors, it was like, okay, this property is not paying distributions. And then I had to relay that to them, when in fact the operators was like, hey, this is going to pay out within the first 90 to 180 days. So then to have to step back and say, no, we can't pay nothing until like 2025 because of these interest rates, that's a huge failure in the eyes of your investors. So then having to go out there and be creative in how to raise money, and just really put just foot to gas, getting in front of people to acquire the other apartment buildings, to make things right and make sure they got paid distributions from something. That helped me out a lot. That actually motivated me. That like taught me something in this business that really, if I had started with just instant success, then yeah, it wouldn't have worked out.
Thank you for sharing that. Give me a digital or mobile resource you recommend for investors.
A digital or mobile resource? Like something I put together?
No, just anything that you use, an app or something you go online and find, something that you share, anything that helps you or could help our listeners.
Oh, something that I might utilize myself. Okay. So an app that I utilize, well, I was gonna say the Bible app, but you know what though? Alux. Alux is actually really good. That's an app that I use every morning. It really gets you in the mind state of winning, because you're learning different lessons.
You said it's Alux?
Yep, Alux.
All right, we'll check that out.
A-L-U-X. So
you said ALUX?
Yep, ALUX.
All right, Alux it is. We'll make sure you check that out and list that in the show notes there. Give me the book you recommended or gifted the most in the last year.
So the book that I recommend is How to Be Rich by J. Paul Getty. One of my favorite books. And the reason why is because he talks about creating wealth, and he talks about watching his dad who had created wealth, and then he expanded upon that. And he talks about how his dad, he didn't create wealth for the sake of what can I buy, what can I do for myself. The wealth that he created was because he knew that those men that was working for him in the oil rig, they needed to take care of their families. And he understood the responsibility of being a CEO of a company. You're taking care of all of your employees. The livelihoods of their families are dependent on your success. So you have to make decisions that mirror that you understand that.
I love it. All right, give me a daily habit that helps you stay focused on your goals.
A daily habit. Honestly, my daily habit is I go in and I read through Proverbs. Proverbs, Sirach, that's another scripture, Ecclesiastes. So anything that's going to give wisdom. So every single day I'm looking for something that's going to provide wisdom in how to move forward with things and how to handle difficulties in the world.
Give me your number one insight for launching a fund.
My number one insight for launching a fund. Let me see. My number one insight for launching a fund.
Let me actually ask a slightly different question. Give me your number one insight for investing in a fund.
Yes, so my number one insight for investing in a fund, I would say with that, you have to know the operator, know who's going to be over the projects, know where your money is going to be at, understand who's going to be there, like, and understand the character of the people that you're investing with. Because there's some people like if things was to get too difficult, they might quit. Well, see now that messes up everybody. So you got to know who you're dealing with. Like I would
Oh,
say, don't invest with anyone who hasn't experienced adversity.
love that, man. It's a great tip there. All right, let's go the other way. Let's lighten it up a little bit. So you are in Dallas now. Give us your favorite place to grab a bite to eat.
Man, in Dallas. So you know what? One of my friends, she told me she was like, you eat at this place too darn much. But I have two favorite places. One is Frisco Gun Club, which I'm a member at because I like to shoot all the time. You might catch videos on me on Instagram shooting my rifle. And then also a place I prefer Ethiopian food. That's my favorite food. Queen of Sheba.
All right, two good options there. Frisco Gun Club and Queen of Sheba. Jonathan, or I'm sorry, Jonathan, Joseph, I really enjoyed our conversation. I'm thinking through a couple things you said. One, that transition from a wholesaler to a multifamily investor to a fund manager and recognizing what it took. There were some similarities that you saw, which may not be as obvious to some of the listeners, but a lot of similarities in your role and responsibilities as a wholesaler, as you kind of transition to being a fund manager. You talked about the importance of having that experience, right? And leaning on people who
Yep.
had that credibility if you didn't have it yourself, which I just think is absolutely critical. We call it credibility, but it's important to align yourself with people and treat it as a team sport. You also talked about helping other people find access to capital that they may not be thinking about, whether that is through annuities, whole life insurance policies, self-direct IRAs. Sometimes people have access to money, but it's not top of mind for them. So your job is try to help those individuals make the best decisions for themselves, but also to think about where they may have some of the resources to invest in these deals. You also talked about confidence, starting out, being able to ask people for higher thresholds and getting people comfortable with you to invest more money. And then last, you talked about making sure you got the right team with you, vetting them, asking the right questions. Have they overcome adversity? Just making sure that, that character is there and you're going to be partnering with the right people. Love everything you talked about there. And I think it's really helpful for our listeners to learn a little bit more about you and your journey. Again, for folks who want to connect and learn more, they can check you out on LinkedIn, which we'll put your LinkedIn page in our show notes. Joseph, just want to thank you for being a great guest and coming on Multifamily Insights. We look forward to staying in touch with you, and I hope you have a great day.